All right, can everybody see my screen?
Yep.
All right. New Monday. All right. Welcome back, everybody. Let's just jump straight into it. I'm going to continue a little bit of what I was doing last week, touching more on the valuation stuff and applying it actually different companies of interest. But this time we're going to actually, I forgot to change that. We're not doing dividend stocks. I'll say that for next week. This week we're going to use something different. We're going to look at a different valuation multiple to kind of drive things. I don't know if Jay's going to end up reviewing moving averages again, if he's going to go more in depth when he comes on. But whatever he has for us is pretty special. He brought up this idea of pocket pivots before, which is a certain type of investing, which is really interesting once you get the hang of it. But I don't know if he had time to, actually review and share with you all yet. So we'll see if he actually does that. But in the meantime, let's get back to some good old fundamental analysis and review valuation multiples once again. So yeah, just a quick review for those that were on last week. Quick lesson on valuation. Valuation is just the process of finding the worth of an asset or a company, right? And most investors utilize valuation multiples. It's a good way to quickly look and understand a value of a company relative to its fundamentals. It also makes it easier to compare companies if you look at it from relative to their fundamentals. You can just think of a valuation multiple as a price tag for a company. Now, last week we talked about the best valuation multiple for more innovative, high growth companies, which is price to revenue. But the most widely used valuation multiple that you'll see everywhere, price to earnings. Price to earnings is the one everybody wants to know and they discuss. If you watch CNBC, that's the one they primarily use. Most, like a lot of old school investors and even new school, price to earnings is where everything stops and ends. Wow, I really did not update this presentation. All right. So ignore the price to revenue thing here and it's price to earnings, how they compare. So historically, the price to earnings multiple for the S&P 500 is about 16 times, right? And that's, so the price of a stock is 16 times higher than the earnings you'll get per share. That's the best way to think about it. That's how much money you get. That's how much of the profits that are allowed to you. It's not that bad. I mean, for companies that are slightly growing at the rate of the economy, maybe a little bit faster, that's where things will go. Things are a little bit interesting during these times. The price to earnings multiple for the entire market has been elevated probably since 2017. 2016, 2017, it's been elevated way beyond 16 times. Actually, today, I checked earlier today, the price to earnings multiple for the stock market for the S&P 500 right now is 27 times. I can explain a little bit why there's such a difference, but it's a lot of macroeconomic reasons, which I don't know if anybody wants to hear about. But regardless, I'm touching on the same type of thinking we had last week. To buy more innovative, high-growing companies, first of all, you need to have a profit to actually be considered for it, like actually have a price to earnings multiple, right? So you have to be not only growing, but actually have to be profitable. That's probably where some innovative companies won't be. They might not have the profitability to actually have a price to earnings multiple, but even if they do, it's probably small, which is again, fine, right? Because these innovative companies, they're big industry disruptors and they're expected to grow at a very fast clip. And again, the faster you're growing, the less profitable you need to be to kind of like justify yourself. You got to turn profits eventually, but it's okay if you just barely have any profits. I'm going to show you all later with Tesla. That's the thing that happens with Tesla. Tesla shows flashes of profitability. It's not consistent, but it's good enough, right? It's good enough to keep investors happy while they're still growing. So yeah, I'm gonna use Morningstar again, and I'm also going to look at Yahoo Finance. So when I'm looking at stocks and trying to understand things from a price to earnings perspective, that's usually how I do it. I look at both Yahoo Finance, as well as Morningstar, primarily because um, Yahoo Finance has updated like analyst numbers, like they expected growth into the future, and that's what you really should be comparing, like the expected growth into the future. Also, there's this thought, and you'll see what the couple of companies I'm going to bring up, and other companies you all are interested in. We can talk about more. There's this difference between how easy it is to understand the growth story of a company. So companies that are in like fast growing industries, of course they're going to trade at higher multiples. This isn't easy to understand company. Companies that are a little bit tougher to understand, like for example, last week we were discussing Boeing. Boeing's hard to understand, right? You see all this negative news, you see all this movement that's happening. They got multiple business lines with a lot of moving parts. Boeing is a tough one to understand. It's not an easy like story to understand how they're going to grow. So because that their valuation is usually lower. Compare that to an Amazon. It's easy to see how Amazon's growing. I mean, it's not that hard to understand. AMD is another one. It's not hard to understand why they're growing so fast. They're just part of a general broad industry that's growing. So that also leads to higher multiples as well. And there's also a thought about growth certainty. We can touch on that later, but yeah, let me actually go and share my screen. Wait, is about to be a question? Anybody? No question? Okay, sorry about that. All right, but I learned my lesson from last time. So we do this. And now, can everybody see my new screen?
Yes.
All right, cool. So first I'll start off with Visa. So Visa's a stock that I really like. I think Jay really likes as well. I mean, Visa's everywhere. Them and Mastercard is essentially everywhere. Easy to understand growth story because I mean, just everything's converting from cash to the card swipe, especially outside of the U.S. I mean, U.S. is probably ingrained, but outside the U.S., it's still picking up plenty of steam. So yeah, no, it's definitely going to happen. So let me see. Let's go to financials here. If this loads, okay, and has a price to earnings ratio of about 36. Now, once again, the price to earnings ratio of the market over a long period of time is around 16 times earnings, right? So it's trading like almost 2.5 times more than historical average. Now, part of that is we touched on revenue growth. Revenue growth is a big thing, but this is backward looking. Also, net income growth is backward looking, but it's growing about 2.5 times faster than the market on average. Earnings per share tends to grow about 10% on average over the long term. So with these two growing faster than that, literally by about 2.5 times, almost like that by itself justifies like Visa's valuation. Um, and to look a little bit deeper into it, if we scroll down um, in Yahoo Finance is usually on this analysis tab when you're looking up a company and like earnings estimates from um, Wall Street analysts. And you go all the way down, you got these growth estimates in specifically looking at next year, well, my bad, next year and the next 5 years, right? So the next 5 years don't look so hot, right? It doesn't look so hot. It's like, wait a second, this company, I mean, Visa, I mean, they're going to be growing almost in line with historical market average. If we look, we go back to valuation, I mean, a price to earnings of about 36, I mean, yeah, price to earnings about 36, 37 is high, right? So then you have to think a little bit more. Like I mentioned before with Visa, it's easier to understand like growth story. Everybody uses Visa. It dominates the market pretty much. It's them and Mastercard. Like competition matters. All these different things matter when you think about valuing a company. Um, so you pull up Tesla. Tesla's another one. Come on now. Okay, Tesla's another one that's pretty interesting. Okay, we'll come over here. Actually, it doesn't show a price to earnings multiple. Pretty interesting, even though they're profitable on and off. Um, so it doesn't show it here, but on a quarterly basis, they have some profits. If we go into, we dig a little bit deeper here with Tesla, they at least have a forward earnings type of thing. Forward earnings is just what's going to be, what's the earnings next year, and what's the valuation multiple on next year's earnings. And if you see, that's a ridiculous number. I mean, that's even way outside the range that I was discussing with innovative companies, right? And Tesla definitely counts as an innovative company. Um, so trading at 475 times next year's earnings is ridiculous. But again, actually, let's go back over here. Let's see like general revenue growth. Um, Revenue growth, and we discussed this last week. Revenue growth is growing at a 50% clip. If you're growing revenue that fast, your company is going to double in size pretty much every 2 years. I mean, maybe even less than that, right? Which is pretty insane. So, I mean, the average company grows revenue by about 3%. Tesla's growing by 50%. If I look at expected growth going forward, oh, Tesla had a great day. Wow, I didn't even know. Does anybody trade Tesla today? Just wondering. And if we scroll down, they also have pretty insane expectations in terms of like earnings growth. Yeah, that's pretty insane. So again, it's one of these situations where, yeah, the multiple seems a little bit crazy, but the growth is so high and so fast. And again, Tesla is on and off profitable, so high, so fast that the price justifies the valuation. Like the growth justifies the right valuation. Let's see, is there any other companies you all want me to look up? Any other companies in mind? Shopify. You know, I was just talking to a potential investor about Shopify today. They absolutely love the company. Actually, Shopify profitable? Let's find out. So right here, you're gonna have a price to earnings multiple. I mean, for those who were on the call last week, I mean, check out that price of sales, 67 times. I mean, it's insane, absolutely insane multiple, right? It's like, why are people paying so much for this company? And earn like price to forward earnings. I mean, I don't even know what to say about that number. Right? It's kind of insane. It's kind of insane. If I look up Shopify over here, I look up their growth projections in terms of earnings. I don't even know if they're gonna have positive earnings growth projections. Shopify had one hell of a day too. I mean, I'm telling you, today the market was interesting. It seemed like things were going to be negative, and they just turned around in a quick way for anything tech related. So yeah, I mean, next year doesn't look so hot, but growing at 85%, that's almost like if you do that literally over 5 years, you are going to pretty much double the size of the company every year at that type of growth. It's just the way the math works out. It comes pretty close to that. So again, that's insane. I mean, it's not as insane as Tesla, but let's think about that for a second. Why is this happening? Why such a high valuation for Shopify? Shopify, if you think about in terms of like elasticity of customers and like switching costs, like once you're on Shopify's platform as a small and mid-sized business, you're not going anywhere. You're not going anywhere. It's super convenient. Things are laid out for you e-commerce wise. That sector is growing. Just a general, again, easy to understand growth story. General wave towards e-commerce has been amplified during COVID-19. So you feel pretty confident about what's going on there. If I remember right, Shopify, I mean, they have a monthly subscription. They used to have something where you can like pay ahead, to have like a quarterly or even a 6-month subscription. I don't know if they do that anymore, but that used to be a thing. If that's still playing out, that's growth certainty. Like that, it feels pretty good that you already have money coming in, even though it's unearned revenue. Um, People think that Shopify has competition. Shopify doesn't have that much competition, like real competition for what they're doing. They don't. They don't really have any true competitors. So all those dynamics, is it worth a $5,000, well, not $5,000, but 5,000 times price of forward earnings multiple? I mean, that's still pretty high. I don't know if I will pay that, but I mean, again, the big thing with multiples and trying to understand them is that they're very helpful if you're investing maybe from 6 months to about 2 or 3 years. After that, if you're a long-term investor, you just have to truly believe in the company and the valuation. I'm not gonna say it doesn't matter, but it doesn't matter as much. So if you are truly a believer in Shopify, go ahead, make it happen. All right, any other companies?
Look at another one called Vertex.
Vertex? What do you know the ticker on that, or?
Is Vertex, VERTEX. I don't know the ticker.
Energy?
I think it might be a tax technology company. I was trying to look it up. Let me see if I can find the ticker.
Yeah, I don't see anything, man. I see energy, and I see a pharmaceutical company.
Come back to me. Let me see if I can find the ticker real quick.
All right, I'll come back to you. Before touching on Boeing, anybody else has any other suggestions? It's okay to speak up. It's all good.
VRTX. So that's, or am I looking at that incorrect? Yeah, VRTX is the ticker.
And it's a pharmaceutical company.
Gotcha.
Okay. All right. Given that I don't know anything about this company, let's try to figure this out. Okay. So forward price to earnings is 34. Okay, that's cool. Let's see why. Part of it could be pharmaceuticals itself. Just being in that space right now could help, but it could be a lot more than that. Growing revenue pretty fast, 34%. So using the rule of 72, essentially are doubling revenues essentially every 2 years. I mean, that's a fast clip to be growing. Really now, I mean, it looks like that wasn't always the case, but right now, really good profitability numbers, which is nice. And also backward looking earnings, it's 53 times. Forward looking earnings is 35 times. So again, pretty insane, pretty high, but it looks like it's justified. You're growing really fast, and you have really great multiples. I mean, great profitability numbers. It's almost, given to what we've seen so far, I don't know like the company, so I can't speak to the company, but what's seen so far, I mean, it looks like it's a buy. Yeah, I mean, growing at about 24% into the future. Yeah, I mean, granted, this is the one for you. This is the one. Like what got you interested in this company?
This is kind of like
one of the stock picks from one of the groups I just joined, and he gave it to us.
Well, it's not a bad call. It's not a bad call at all.
It's supposed to be a high performing stock.
Got it. No, it looks like it will be. Looks like it's pretty good. I mean, it has a good setup. At least looking at the basic numbers. I mean, you have to dig deeper and understand what's going on with the company. Why is it growing so fast? Is it an easy to understand growth story, or is it a lot more behind it? Yeah, but at least the basis for just looking at the numbers looks pretty good. No, I'll say that definitely looks pretty good. Um,
Hey, and can you also look at ETFs as well, or can you only look at companies?
I can look at ETLs. I'm gonna have to do some special sauce to look at ETLs, but I can look at ETLs.
Check out one XLK.
Okay, that's a sector ETF, isn't it?
Yeah, it's a tech ETF.
Yeah, but look at that. I've used more. I mean, I can't tell as much, but I'll use marketbeat.com. And it's hard to really see underneath the hood of an ETF because you usually have to buy special data to look under the hood of an ETF, at least in terms of like characteristics. So one thing you could do is just Google it. Literally just Google Excel. Okay, it's a the spider ETF. So when you look for the official spider, I think this is it. Yeah, you gotta look for the official like website of the ETF, like who's the provider to get better information.
State Street.
Oh, come on, man. Get that out of here. All right. So we got some characteristics here. We got some characteristics. Okay. All right. So there's 71 companies within this ETF. The price to earnings ratio forward looking is about 28 times. And the estimated long-term growth is about 13%. So one thing overall with technology, because the growth by itself might not, maybe it justifies the price. Maybe it doesn't. It's a little bit of, it's not a clear case. But one thing to keep in mind with most technology companies, especially within this ETF, which makes up a lot of large companies, right? So the weighted average market cap is 784 billion, which means Amazon's in here, Microsoft's in here, um, Apple's probably in here, Facebook's in here. Like all your big names are probably in here, right? And those big names they normally have easy to understand growth stories. I mean, I already talked about Amazon before. Apple is a little bit shakier, but they have a following, a cult following that'll never go anywhere. Yeah, so yeah, here we go. We got some of the top 10 names, all right? So Apple, we got Microsoft, we got Visa, we got MasterCard. MasterCard's in there. I know I love me some NVIDIA. So NVIDIA's in here. PayPal, another similar to Visa and MasterCard. Similar, easy to understand growth story. You know, Salesforce, I love me some Salesforce. Might be, to me, one of the greatest companies ever created. A lot of praise for Salesforce, but it's another company. But when you're buying this ETF, you're primarily buying Apple and Microsoft. I mean, I didn't realize it was such a huge weight, right? That's 42%, 43% of what you're buying. And you throw in Visa and MasterCard, about half of the movement of this ETF is in just these four names. It's really two.
Yeah, that's cool. I probably should have looked that up. I didn't think to look at the top 10 holdings or however many holdings it is.
Yeah.
But yeah, most of it's coming from Apple and Microsoft, so I can see why. And then you got good on the video in there.
Yeah, man, no, it's pretty solid. No, it was a pretty solid one. Let me have you taken up Jay's suggestion of looking at TQQQ? I'll take that as a no. So let me go back to what I was doing. Pulling up Boeing. Yeah, good old Boeing. Everybody wants to discuss more. Actually, interesting enough, Boeing does not have a forward-looking price to earnings multiple. Whoa, what is going on? All right, let's see what's going on here. Oh, things are oof. Eesh. Things are looking rough. Things are looking rough. We kind of discussed this earlier, but let's see where are we at. So we can use it here. So yeah, things are already looking rough for 2019. And trailing 12 months is looking even more rough. Net income's not necessarily there. Yeah, they're getting hit. I mean, Boeing going through a tough time right now. Let's just say that. You really have to have like longer term belief in the company to invest in Boeing right now. I think, is David on the chat? David, you on? I mean, I see he's on, but I guess he's not responding. But yeah, I know definitely a Boeing fan, but man. Let's see. So yeah, I mean, there's expected to be like a turnaround, um, but in next 5 years, maybe things go back to the normalizing. And usually, Boeing, I mean, their focus is more. If you think about from the defense side of Boeing, selling to the government, those contracts are pretty set in stone, and they usually grow that backlog without that much effort. So Boeing's fine from that perspective. It's the business everybody cares about, which I don't think is as big as the defense business, which is their aircraft business, and aircraft business is really getting hurt. Anything connected to airlines right now is getting hurt, right? So that explains essentially no price to earnings multiple, no love. It shows in the numbers, and we already discussed like price to sales multiples. For the market is around 2 times sales right now, and Boeing is trading below that. So hey, if you believe in a turnaround story, Boeing is your opportunity. All right, anybody got any other stocks? Okay, no other stocks.
Hey, one more. Check out
Yeah.
Okta. My last one. Okta.
Yeah, someone tells me Okta's a fast growing one. So, I mean, not even a Ford PE. So how much underwater are they? My laptop is not working for me today. All right, so horrible multiples, but then again, it's growing revenues by 54% annually. I mean, that's pretty fast. I mean, price of sales is definitely priced like a Lamborghini, which is fine. It's pretty cool. It's all good. When you're growing that fast, maybe the growth slow down a little bit, but they're going pretty fast. Maybe pull the Yahoo Finance on the analysis. Yeah, I mean, I know it's the company's like it's connected to cybersecurity. Am I correct?
Yeah, and that's actually, I believe, one of the things we use to log on for work. So a lot of people are probably using that right now
Yeah, no, you're right.
to verify.
Yeah, we use Okta. No, we definitely do. So again, especially during these times, anything cybersecurity related that can actually grow revenues and find customers. I mean, that's again one of these huge growth stories that are happening in the investing world. It's just an easy to understand story, especially if Okta's already putting up the numbers, growing at this clip. Now, for the next 5 years, in terms of earning growth, maybe it's a little bit slower, but again, this is another company, and there's a lot of companies that are like this, especially within the tech space. A lot of companies are priced very high, partly because it's just an easy to understand story. A lot of people understand it. And if nobody else has questions, and I see Jay isn't on, I'll buy more time and actually show you this app not app, but website I came across. Actually, hedge fund manager came across. I think it's RobinTrack.net. For those who use Robinhood, there's actually this website called RobinTrack.net. And the thing with RobinTrack.net is that it shows the most popular changes, like most popular stocks within Robinhood, and it's actually been a decent indicator. From time to time, it's showing like which stocks are going to go up, which stocks are popular, which stocks are moving the needle. So actually pretty interesting. So for example, let's actually take Okta. So something interesting here. If you're going back to its history, I'm assuming Okta went public around this time, mid 2018, and you track the users holding it. Once the recovery started, Okta, a lot more people start holding Okta more and more. And when a lot of people are buying into a stock, and they're buying at a pretty consistent clip, the market makers, actual market exchanges, are trying to find sellers. And the way they try to find sellers is to raise the price and try to raise the price at a consistent rate. Now, I know that this website and looking up different stocks isn't perfect. Some things are kind of thrown off, but for your more exciting stocks, usually tech related, or a lot of stocks we talk about. And I'll look at NVIDIA, for example. And a lot of stocks we talk about on here tend to do pretty well. In terms of gaining popularity. I also think part of it too is just in general, since COVID, since the COVID affected the markets and starts bouncing back, and I think all the time people just got more interested in trading. And Robinhood's kind of the go-to place for most people interested in trading. So anybody has any stocks that want me to look up here? Wow, I really have a silent crowd today. Okay. All right, cool. All right. That's fine.
Take a look at Shopify again. Want to see.
All right. Okay, come on, let's go down. Yeah, so okay, with Shopify, let's see. Number of users holding it. It seems there were times where it moved pretty well. Sometimes general market choppiness gets in the way. But yeah, it's ever since the bounce back again, if you look at how the numbers of people who hold Shopify climb. And what's tough to understand when using something like this is what's the leading indicator and what's the lagging indicator. So is it because the stock price is going up? That's what attracting more Robinhood users? Or is it more people buying in the Robinhood? And that's what's trying to push the stock up. But yeah, it's tough to tell which one's which, but generally speaking, you have the trend, you might as well ride the wave. So yeah, I think that's if nobody has any other questions or anything else for me to follow up with, I think I will pass it over to Jay. Yeah, I see you on the chat, man. How's it going?
I'm doing good. How are y'all?
Not too bad. Not too bad at all. Wait, I forgot to ask you. What will you be covering with us today?
I was just gonna talk about some stocks, earnings season, and I was gonna do an intro to pivot points.
Ooh, pivot points. All right, that's what I'm talking about. Okay, I will stop
Pivot
sharing my.
points in a little bit of a different way.
All right, I'll stop sharing my screen so you can take over. All right, I'm off.
Can you guys see the screen?
Yes.
Yes.
Hey, yeah, we're getting a lot of background noise. If you're not speaking, can you put your phone on mute or whatever your device you're on?
Okay, guys, I'm gonna talk about an intro to pivot points. And when I refer to pivot points here, they just give you a point of support and resistance, and that can be represented by either the previous day close, the previous day low, or the previous day high. So an example of a pivot point would be this candle here. The previous day high was 940.97. The previous day low was 906.05. And the previous day close was 928.13.
What is it? Immediately.
Can you guys hear better now?
Yes.
Yeah.
Okay. Okay. Can you guys still see the screen?
Yeah, we can still see it.
So the previous day low would be the bottom point of the wick. And the wick, again, just to go over it, is like a candle. This is the lowest point, and this is the highest point of the day. So the previous day high would be the highest point of the wick. The previous day low would be here, and the previous day close would be where the stock price closed the day at. So that would be here. So these all give you buy points. It gives you a sense of direction for a stock. So if the stock is breaking the previous day low, it's telling you that it's going to go lower for the day. It's going to put in new lows, and then maybe you could have a buy point in to buy the stock, or you could get in puts when it breaks the previous day low. But before it gets to the previous day low, it's going to break the previous day close. If it breaks the previous day close, in this instance, we're talking about to the downside, our target for our put options or for shorting the stock would be the previous day low. So if I was shorting Shopify here, from the previous day close was 928, and then I would short all the way down to 906.05. That would be my target to get out with a profit. And that would be an example of how you intraday trade. And in the opposite direction, if a stock is breaking out, see today Shopify was up, and if you buy here at the previous day high, it opens up above the previous day high, it pulls back to the previous day high. Prior resistance becomes support, so the previous day high would become support, and I could buy here at a level of 970, and then expect the stock to shoot back up from its previous day high. As it did today, Shopify had a 8% move. And just going back over what we touched on last week, I've been buying Shopify. If you guys in the chat, I mentioned I bought it last week when it was testing the 21-day moving average here, all in this area, and it's all the way. It reclaimed the 8-day moving average and it's all the way back up here. And I think it could test new highs before its earnings next week. So stocks typically like to go up before their earnings, just in anticipation of the earnings event and what could happen. So I think that's going to happen. So the main thing is, before you even get to the pivot points, know where the moving averages are. Because if you know where the moving averages are, it can give you a simple buy point for a swing trade. Again, we were buying all in here, the 21-day moving average. It wasn't perfect. It dripped a little bit, just a little bit below it. But if you held for a couple days, as I did, held for a day, I was down about maybe 1%. Then the next day, I'm up 8, almost 9% on Shopify in 2 days, just by knowing where the 21-day exponential moving average was. So let's use another example. So here's Tesla. Its previous day low was at 1488. You see, initially the stock opened down and put in a new low here today, just barely at 1486. Once it got above the previous day low,
Can we ask him to take an IQ test? There's nothing wrong with somebody wanting to protect themselves. And I don't care what the age difference is. I don't care what country it is. If it's
someone please.
Okay, there we go.
So Tesla, it opened down today. We know the previous day low was here at 1488. It put in a new low here. So once it reclaimed the previous day low from yesterday, we know we can buy. Then our target would be the previous day close. And previous day close was of the prior day was 1500. That's even more bullish if it crosses 1500. You also have the 8-day moving average here. It broke below for just a second, got above it again, broke above the previous day close, and then it broke above the previous day high, all the way at 1519, and then it's coming up all the way to here. It closed pretty much as bullish as you can get at 1650. So this is called a reversal. My mentor calls it the red dog reversal because there's a red candle, comes down here, puts in a new low, reclaims the prior day low, and then you could buy it once it reclaimed 1488. So you could have been long Tesla from 1488, and that was the prior day low, and rode it all the way up to 1600. So these just give you gauges and lines of support and resistance and what a stock might do each day. Is it opening weak? Is it opening strong? And then what can I do with that? So how can I play that? If it's open and if it breaks the previous day close, I'm gonna expect it to go down to the previous day low. It tests the previous day low. If it breaks the previous day low, it's going to continue down further until my next support and resistance, or maybe coming to a moving average. If it breaks above the previous day close or breaks above the previous day high, it's going to go higher and maybe to my next point of resistance, or it's going to go to another target that we might map out. So it's just showing us what could potentially happen each day and kind of giving us a guideline. It can also be used as a stop. Let's say you had a whole bunch of profits in Tesla and you didn't want it to go too far on you. You could have stopped out here at 1488, waited to see if it was going to put in a much lower low. You saw it turned around. So that's called a red to green reversal. And then you bought when it reclaimed the prior day low, and you just rolled it up all day. You didn't really have to worry about it the rest of the day. That was as low as it got. So pretty simple concept. Again, previous day low, previous day high, previous day close. If you just search on the candles, if you just look at the whole body of the candle, it's just the low, the high, and the close. And it shows it right up here at the top where you see Tesla. You see H, L, C, and open. The open was 1519, the high was 1650, the low was 1488, and the close was 1643. You can do this. You can do this concept with any stock, and obviously it kind of takes time to put these concepts together. So that's why I just want to give you guys an intro this week to what it was and how it could potentially be used. Now Tesla was a great example of this. Once it reclaimed the prior day low, that was a great sign that it was regaining some strength. And Tesla's a high momentum stock. And, once it did that, you could have made great money from here. You buy here and then ride it all the way up, maybe all the way up until tomorrow when they report earnings. Excuse me, not tomorrow, Wednesday. It might run again tomorrow, and then I would not hold the stock into earnings unless you've already been a long-term investor in it, just due to the risk of, are the expectations already priced in? Are they not? What's going to happen? All that. Any questions?
Yeah, I saw the buyer zone, but I didn't see the seller zone there.
The seller zone on Tesla?
Yeah, but I mean, we can look at CrowdStrike.
So I didn't have a seller zone on Tesla because it really hasn't put in one, put in a strong defined seller zone. Like, even though this was kind of the top, you don't really see that U formation all the way. So even though it's fell, once it tested this moving average here, that would have been my first buy point. And had I really need to set up like moving averages are so important, guys. Like if you have on your alerts for the 8 and 21 day, even the 50 day, any major moving average, all you had to know was today was it tested the 8 day and it just bounced right off of it. Look at it, like perfect, like pretty much all the way perfect. Like you can't, like, just by knowing what the 8 day exponential moving average is, you could have made 9%. That's how you get precise entries, especially if you just want to swing trade or throw like a option out for a month out. So I just don't have a sell zone for Tesla because it hadn't really put in a defined top yet. With the sell zones, the way I've learned, they really need to have that leg in, base, and leg out. So let's look at something more like Facebook. See, Facebook actually broke out of the sell zone today. It actually broke out of all this resistance, and it's getting above. I had that marked. Let's look at SPY. SPY actually broke out of its resistance in the 320 to 323 area. Once it got above 323, 38, it's bullish to the upside. Just showing a lot of strength in the stock market. The overall stock market is doing good, obviously, if it's above this resistance level, which it did. With all the tech names reporting earnings, I see just more positive continuation into tomorrow until like some of the bigger names like Microsoft, Tesla, and some of these companies report earnings. But just another observation. I was buying CrowdStrike. I did post this in the group chat. I was buying here because I know I was getting a good value price around the 21-day moving average. Like, it's not always perfect. It's not always right here. It slipped a little bit, but I didn't think it was going to test the 50-day exponential moving average. I've been wanting to buy CrowdStrike for a long time, and now I'm up 5+% in 2 days because I had a precise entry. I knew I wanted to buy here. I know I was getting a good value buy in this area. So just knowing where things are, what they're doing, where they could go, gives you opportunity. If it would have came down to its 50-day, this would have been even more of a gift. That's only like $4 difference from there, but that would have been even more of a gift to me that I got to buy it there. And I would just ride it all the way back up. It will reclaim each and every moving average and go higher and higher and higher, and then create a new uptrend again. But you see, strong stocks often pull back to the 21-day moving average. They rarely ever pull back to the 50-day, but if they do, they will bounce off of that. So in two days, approximately, I've been able to get 5% on a swing trade, and this is probably just going to be a long-term hold for me. Boeing, same thing. It's right around the 50-day moving average. I think it's going to reclaim this. I bought here. I know it's under it. I know I like Boeing. This is a buy zone for Boeing right here. And this from this area, from 173.75 to 167 is a buy zone. And I got this buy zone from here. If you guys kind of see this V, it gapped up so hard you can't even see the kind of like the leg out, but that is a downward V. It's kind of touched this level a couple times, which is not the most positive thing, but I just know I like Boeing as a company. I think this is a okay spot to buy it at. Paycom, this is one I've been looking at. I was buying here and in here. You rarely ever see a stock like Paycom test the 50-day exponential moving average. I was buying in here, buying in here, and as you see, it just reclaimed it, and now it's reclaimed the 8-day, and it's probably going to reclaim the 21-day, up about 3% on the stock in 2 days. If you guys can just get that one simple fact, that moving averages are important. DocuSign, I've been waiting to buy this stock for so long. Finally got to buy it here around the 21-day, up almost 7% on the stock just from buying it here. So, what happens when stocks come back to the 21-day?
Bounce up.
Simplest concept in the world. You don't have to work harder for it. You can just wait and be patient. All the companies that you want to buy. I've been waiting for Beyond Meat. I bought Beyond Meat today because it was always it's a little bit under the 50-day. It's also in a buy zone for me. So I've been wanting to buy it. I thought I'd buy it right here in this area because, hey, it's a swing trade. It's under the 50-day. I know it's gonna get back above the 50-day and reclaim the 8-day and reclaim the 21-day. Why not buy it here? Doesn't have a sell zone till 165. So I have about $25 worth of reward if I just want to stay in this trade a week or two, even a month, or I want to hold it long term. I know I'm getting it at a value price in this area. This is how you time the market, or how you beat the market, by buying at the right time. I've wanted to own this stock for a long time and I couldn't, just because it always was $200 or something that I didn't see value in, all the way up here. If we go back, it's up here or in this area or in this area. And now I'm finally getting it at a good price, I feel like. So I think it's going to turn around here in this area and go up. And if it goes lower, there's another buy zone here in this area that I could think about purchasing the stock in. So just knowing your levels and knowing like what you want, what companies you want to buy is important to me. I want to buy this C Limited. It's a gaming growth stock. I missed it here at the 21 day. Now it's already reclaimed the 8 day. If it ever comes back down again, I'll try to get it here, or even better here if I can. It's such a strong stock. If you see this trend, it's just straight up since April or March. Just rarely ever goes below the 21 day. It really just rides the 8 day. Rides the 8 day, rides the 8 day, rides the 8 day. Not all the way comes down to the 21 day. Came down to the 21 day here, and what did it do? Just bounced. So it's never came below the 21 day or the 8 day for 3 months. So when you get those opportunities, you have to buy. Chegg is another stock I'm interested in. Kind of always goes up. Maybe test the 21 day or the 50 day. This was just a straight supply and demand zone there. Those are the buy zones we're talking about. Tested the 21 day here. Kind of, it's really not a coincidence that the 21 day and the buy zones kind of match up, the supply and demand zones. Here, it tested the 21 day, shot back up. Test the 21 day here, shot back up. So kind of got to have those alerts ready and be ready to buy when stocks you want fall. I'm interested in Fiverr. I can't think of the ticker right now, but let's look at another. This one it's been a high flying stock. Rarely ever it's coming down to the 21 day. And then what did it do? Bounced all the way up to here. Came down right there, bounced. That's $6, $7 worth of on a trade. If you were in options from the 21 day, you made 50%, 100% on your money because you just knew what the 21 day moving average was. Look at the trend. When does it ever break the 21 day? It almost touched it here. Went back up. Just a straight line up, this trend. They let you know what's happening with the stock. Like whatever stock you want to look at. Apple. Ever since this zone here in April, it's just been riding the 8 day. It has not broke the 8 day. Look at all this. Just riding it. If it ever comes down to here, what's going to happen? Microsoft. I was buying here the other day. I posted in the chat, said, hey, I bought some fractional shares of Microsoft. I bought here. It's up here already. Strong stocks rarely break the 21 day. So if it tests, look, test here, went up. 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 It's proven history. This is not a theory. It's facts. That is the simplest way to, help you with your entries. Write the stocks down that you want to own and then wait for them to pull back to the 8, the 21 day, or the 50 EMA or the 200 day exponential moving average and buy from that point. I've been wanting to own this ENPH. If it ever pulls back down to here, that will be a good buy for me. It's just been riding. Sometimes it'll touch, drop for a little bit, reclaim, touch. You know, this one's a little bit more whipsawy, but it's more of a growth company. But overall, it's an uptrend. Just has its pullbacks. Any questions?
This is great. This is great content.
I know this. Don't let it go over your head, guys. It's just when it touches the line, buy it. Like, that's the simplest thing I can give you. Like, any other stocks you guys want to look at, or y'all looking at that y'all want to see the chart of, or anything like that?
What is it? It's a semiconductor company. I think it's called SOXL.
Oh, XOXL. Oh, yeah. This is one of the group favorites. When should you have bought it? We should have been buying right here. I need, and we were up 6.66% today on this. This is just great. But here was a buy. It tested the 21-day here, and it just shot up. Hadn't really came down since. Once it tested 21 days, your next target would be the 8-day. It got above the 8-day, and it's probably gonna keep going up if we have a strong market. If it drops, I would look to buy at the 8-day, or even better at the 21-day. If you have the patience, to wait and buy big, buy it at the 21-day. The lowest it's going is the 50-day. Bounced off the 50-day right here. Bounced off the 50-day right here. What is that also? It's a supply and demand zone. It's a perfect V. We draw a horizontal line here. So we draw a line like this. That we draw a line on the bottom of the wick, right, to the top of the body. This is a perfect supply and demand zone off of the 50-day exponential moving average. I wish I would have known this 2 years ago, guys. Like, I promise you, this is like gems. You can never go wrong if you know where you're buying it. Your risk is defined. If I wanted to buy here at the 50-day moving average, and I say, all right, my stop is going to be 148. I'm giving $3 worth of risk and my target might be the 8-day up here for $20 worth of reward. That's how you find high probability setups. Again, we also look for these V formations. We look for that to buy as well. But the moving average is just a simple way to kind of judge that as well. Let's look at Adobe. Oh, look at this.
Jeez Louise.
Kind of testing the 21-day right here. It didn't perfect. Like, sometimes it breaks below it just a little bit, but still, what is that? This is supply and demand zone.
And that's below the wick too. Your buyer zone is below that long wick, and then the top of the bottom.
Yep.
But your stop loss would be, 20%.
Yep. So we know the 21 days. We know the 21 days close. So we're probably getting into a good zone. But if we want to be precise, we have a V formation set up right here. Goodbye. Let me remove these. Look at that. It's not, I know I didn't even notice this, but most of the time, the 21-day moving average is going to coincide with the supply and demand zones. I don't know why, but it does, and it makes sense.
Hold on, you're gonna have to explain that one, man.
If you do these zones a lot and you have the moving averages up, the 21-day exponential moving average is going to be like near the supply and demand zones, just because the 21-day exponential moving average is also giving you a buy point. It's also giving you a barometer of, all right, it's probably going to bounce here. And what is this? What is these candles showing? It's just showing the price the big banks were buying and selling in this area. Where's this area at? It's also where the 21-day exponential moving average was. Now, 21-day exponential moving average is not perfect, but it does give you good points. Same as the 8-day. Here's another formation. If you want more uptight buy, this is called a Z formation. This is the first time I'm showing you guys this, but price goes up, stops going up, and goes up again. So you have price goes up, it trades sideways for a day or two, then it goes up again. That's why we call it a Z or a chair formation. So that's going to be right there, another buy zone. And actually, it would be on the bottom of that wick. But it's hard to move this little toggle.
Right there.
So right there. To right there. Now that's a very small buy zone, but it is one. You would probably you would be better to wait for this here, and it coincides with the 21-day, and it's a stronger zone because the V zones are stronger than the Z's. But that is a point. If I just wanted a quick day trade or a quick scalp or something on a strong stock like Adobe, you could buy it there. And then once you get into the previous day low and previous day high and close, it just adds more on top of this information we've been talking about. I'm gonna try to I didn't have a lot of time to really tie that in, but I'm gonna try to have some more examples on why that's so important as well, just to know where you're buying it. So you're taking the guesswork out of a lot of things. Like you have defined risk and you know what could happen. It kind of helps you set your targets. Let's look at Tesla again. Like look at what would have happened if you bought at the previous day low here when it reclaimed it. It set in it put in a new low today. It also touched the 8-day exponential moving average. So really, really strong stocks are not going to test the 8-day moving average that much. It touched it and it just bounced right off of it. So you don't even have to know what the previous day close, previous day low, previous day high is. You just have to know, one, it touched the 8-day exponential moving average. I need to buy. And if you bought right here at the 8-day, what did it do? It bounced right off of it to the T. Look at this big green candle. That is 9.47% just by knowing what the 8-day moving average is. But also, it set in a new low. It reclaimed this low. So this would be your buy. And then you have that much worth of risk. You have $2 worth of risk to potentially test new highs all the way up here at 1,800. 1,700,
300 shares. You got about 100 shares.
What? Even if you just buy one share of Tesla, even if you buy a fractional share, the way Tesla moves, if you buy $300 worth and it goes up $100, well, you still made good money. You still probably made about $20 on your 300. If you buy 500, you F around and 500 turn into 75, and you like, dang, So it don't matter if you buy it with fractionals. I don't always have the money to buy full shares, but buy $50 worth it when you see it touch the 8-day, when you see it touch the 21-day, when you see it touch the 50-day, or when you see it come into these zones. This buy zone is a Z formation. Price goes up, stop going up, goes up again. This here will be a V formation right here. From here, the low right here to here, it's a V formation. It's really just a continuation of this Z, but that would be another possible buy point here to here.
See, I think another thing we have to really drive is knowing your target, like knowing where you're going to get out.
Right.
So you can close on those profits.
Now,
Yeah,
Tesla is not the best example of that, but let me see if I can find. Let me see if I can find.
You get a Tesla, stay in there.
I bought $80 worth of Tesla. I'm at 139 now.
Yeah.
Yeah.
Let me see. So Boeing kind of has a sell zone right here. If you look closer, Now this could easily break out of it, but it has a buy zone and a sell zone very close, so it's not the greatest trade in the world. I just
It's really
think
hitting it twice. It hit
I
it
think-
twice.
yeah, I think sometimes you just have to buy things based on, you know, a long-term approach too. Like I just want to start a position in Boeing. I didn't own any Boeing and I like the company, so I just want to own a little bit. But there's really a sell zone, so this is not the greatest R&R from here
Hey,
to here.
if it dropped to that next buy zone,
At 153, yeah.
I've been talking about 144 for a while.
Yeah. Yep.
I got some orders to pick up.
You know what? I really could move this line up because this is a Z
Maybe at
form.
150. Yeah,
I really could move this from here.
151. Yeah.
From here to
I would
Yeah.
rate that
that's a strong zone too. It just shot out of that. That's beautiful. There, that's a beautiful zone right there. But yeah,
we'll see. We will see.
and then you have this, and then if you break that, you have this V formation here, 113 to 122. That's like generational type buy. But look how it shot out of that V. So just, you know, finding your buy and sell targets. We have a real strong sell zone. I didn't get that top perfect, but we have a real strong sell zone here. Trying to help you guys see it better. I like having the sell zone in red so you know the difference. So 234 to 222, that would be your target. Not really a
Still
strong.
morning time?
This is not really
Is it still
strong.
morning time?
That's not really a strong sell zone there. So that'll be my target. This is kind of like a weak sell zone. It's not much, but this is a strong. It came out quickly. You know, this kind of pitter pattered around. It wouldn't get the highest rating for a zone. This zone came out, and it's a clear, you know, parabola. I also wanted to buy this IIPR. I'm waiting to catch it. It has a nice dividend. Great, you know, kind of looks sloppy on the chart, but when it tested that 50-day, you could have bought it, or when it tested the 21-day, you could have bought it. It just kind of rides this trend. Here's a supply and demand zone here, this V. From here to there. Try to recognize these patterns we've been talking about. It didn't, from that V, you could have made so much money just staying in it. It just rode the moving averages. Rode the moving average here. You could have bought back again. You could have added to the position there. Stayed in. Tested the 21-day. Shot back up. Tested the 21-day. Broke the 21-day. Came the 50-day. Shot back up. If you like the stock, you know, it's certainly a good stock. You know, this one kind of has more swing and highs than Apple will. Apple's just straight, you know, something like DocuSign is just straight up. You know, you rarely can ever buy DocuSign. It's just like a cliff. Like DocuSign would be great here if I could catch it at 162 or something, you know. But, you know, I'm going to have to settle for these 21-day pullbacks. You only got 3 of them so far in the last couple of months. Here, here, and here. And I got to buy it here, and that's why I'm already up 8% on the stock.
Hey Jay, take a look at Shopify.
Oh yeah, I was just buying Shopify the other day. I'm up 9% on that when I bought it. Just because it was in supply. I removed the supply and demand zone, but if you see, this is a V here. So this is a V. One that's a V from 932 to 905, and it was at the 21 day. So you can buy all in this zone, especially if you're not trading options. Sometimes with options, you have to be right so fast. If you're just buying shares, you don't have to be right away. You can just buy shares in here and here. If it breaks a little bit below the 21 day, even a little bit lower, buy some right there. You know it's going to go back up. It's Shopify. It was the easiest buy in the world. Like, buy it. So you see how David, you see how these zones are coordinating with the 21 day a little bit? Like they're right in that area?
Yeah.
I didn't know this before. Like I learned the zones before I learned the moving averages, but the moving
I haven't
averages
even-
really help put everything in perspective.
I really haven't even dove into the EMAs just yet. So like whenever we're looking at these charts, I'm still identifying the zones, the buy zones versus the sell zones,
Mm-hmm.
and then trying to rank them by.
And you see, like strong stocks, like Shopify, kind of broke out of this zone. Like there was a sell zone, like maybe a little baby sell zone here, but it's already broken out of it before. Like so, we don't have a sell zone here. Like even Terry said, if you're in the group, she kind of said you kind of have to ride the trend because the market's so crazy right now that we're not really having strong defined sell zones. Normally this would be a strong defined sell zone, and every time it came to it, it would falter, but it just broke right through. How do we know it's not a strong sell zone anymore? Because that wick right here. Look at this wick. It's already above it. So we know it's not really a valid sell zone anymore. It already broke above that. So I can't really call that like a strong, really strong sell zone. Shopify is probably going to test new highs before its earnings. It has earnings in about 2 weeks or a week and a half. It's probably going to break above this 1053 level. How do you stay with it? You stay in with the moving averages. It's probably going to ride the 8-day moving average. This line is probably going to get more vertical and kind of level out like that. So, back in the day when the market wasn't so hectic, the zones were a lot easier to identify. Just be like bam, 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 bam. You're just buying off of it and selling when it get close. But it's not quite as simple anymore. Here's another zone right here. I doubt we get it again, but if we did, see this V right here? What's this also? This is a Z formation. Price goes up, stops going up, goes in. This is Z or chair formation. So it goes up one sideways and goes up again. So we're looking for these formations to also give us points to buy. Actually, I shouldn't have put it there. I should have put it. I should have put it at the bottom of the wick, right? So right there. That's not perfect, but to the top of here. Another zone right there. But before price breaks any of these zones, it has to break the 21 day. If it doesn't break the 21 day, you should have bought it the 21 day. I'm saying break it and stay below it. Like it's coming here. Is this helpful? Are y'all learning from this? Make
Man, I
sense?
felt charged up for the week. Felt charged up, man.
Oh, this is one I want to own. T-Doc, I've been waiting for this one. I hadn't got to get in on it again.
Damn, that was the perfect buy zone.
Yep. You see the 21 day here? It's kind of forming a V. Now it's not as pronounced because it's just this big ass bullish engulfing candle, but also it came to the 21 day. It has the V formation going for it by there. That's also a Z formation here. Now this line should be a little bit lower. This line should actually be here. I just learned the Z formation, guys. I actually just learned this one. I learn things all the time. It should actually be that. But you see that? That Z? Up, sideways up. Price goes up, goes sideways, and up. And this is really a V right here if we want to be technical. So there. This is just the most beautiful V in the world. From here to here. Look, goes up, test the 21 day, goes up again. Test the 21 day, goes up again. Not rocket science. Strong stocks like this, you have to have a place to buy them. Most of the time, it ends up being the moving average. Or your supply and demand zones. I use them both. But that's all I was going to go over today, guys. Anybody have any final questions?
Oh, no problem over here.
TQQ was up 8% today, you guys. You're welcome. That's yearly returns in a day. That's yearly returns in a day. Let me pull that one back up. Let me share my screen for this one again. I gotta share one more.
Yeah, I bought that at 95. It's at 121 now.
Yeah. What does this look like just from seeing it? Tell me guys when you can buy. What line do you buy it? What line does it not break? Really? What line does it just bounce off of?
21.
It's not complicated. Like 21. Test the 21 day here. Test the 21 day here. Test it here. Test it here. It gave you 3 points. 1, 2, 3, 4. This is just a V formation. This is when the market was falling off a freaking cliff. You really couldn't do anything. You really should have just kind of been out the way because it lost each moving average. That showed weakness. It didn't bounce off of any of them. It lost the 8 day, then lost the 21 day, then it lost the 50 day. And it kept going down. So you really couldn't have did anything but just stayed out the way. But before that, what was it going? Boom. 21 day. Boom. 21 day again, right there. Boom. It doesn't drop much. This is the whole technology sector just with leverage. So this does 3 times what the NASDAQ 100 is going to do a day. So, you can't really beat 8% a day. In a day, 8%.
Hey.
Any other questions? Like, this is my crown jewel right here. Like, if you can't buy anything else, buy this. You need the exposure to the technology sector. Oh, what's that? What's that right there, David? Too. That's the. It's at the 21-day, and it's the supply and demand. Look at that V.
Okay, can you hear me?
Here's a Z formation here.
Can you hear me?
Here's kind of another V. It's not all the way fully fledged, but you could have bought it anyway because it touched the 21 day.
Yeah, that too.
Yes.
So whatever makes sense for you first, you know, the zones are what I learned first, and they are fundamental, but because it's not always going to be, some stocks aren't going to always look as clean as these stocks, but especially for the strong ones, and that's what you want to be in, is the strong names. You need a place to buy. So if you want to buy, you know, Adobe, you need to know, all right, well, I'll just wait for it to pull back to the 21 day. I like something like this, Waste Management. Look at this. It's not as clean, but look at this. I know I can buy it right here. It's a V. You guys see this V? You see what I'm talking about when I say V?
I'm going
It's a
to
V.
under self-service and then reports.
Look. That is a perfect V if we draw a line like that. Look at that cell zone.
I'm going to.
Here's the defined cell zone.
You see that Z right there, or that chair? It came right back down to it. To the
Yep.
far right.
You saying here, right here? This right here?
No, the far right on current price.
Oh yeah, I got you. Yeah, that is somewhat of a Z. Yeah. And it also really if you look closer too, what is that? The 8-day. What is that? The 8? It's right at the 8-day. And what is it gonna do? It's either gonna come down the 21-day, or it's just gonna bounce off of this like that. It's either gonna do this, or it's gonna come here. And then if it comes here, maybe you could buy it here, but maybe since you know this zone is here, you just wait. You just wait for it to come into the zone. That's why knowing both is important. So, that's when I got in the IRA. I've been wanting to own this NextEra Energy. Look how strong it is. Look at this V here. Never really came down since then. Boom. Not too much. You could kind of just have to, I don't know, it's not, it gave you one spot to buy and it just shot up. Kind of another V right here, little mini V, but nothing else.
Not incident tasks, just incident.
How many people are still in the chat? Do you guys have any other stocks or anything you want to look at while I have it up? 'Cause if not, we can meet again next time.
Yeah.
Going once. Going twice. No takers. Cool.
Oh, that's
Well, thank you guys again for another Market Mondays. Jay, we appreciate you. Michael, we also appreciate you, man. Brandon, any last words?
No, man, nothing on my end. Thanks, everybody, for joining. Look forward to catching y'all on the next Market Mondays. And also stay tuned for some more stuff that we have in the works. It might not be market specific, but it'll be beneficial. So be out on the look.
Can I just search for
We need to get a theme player, bro. Every time Market Mondays is over, we hit a button, and it's like our jingle.
Hey, we need
Let
it.
everybody